and welcome traders. I am Rachel Deshelle, Senior Manager of Trading Services and your host for Long Options. Now, I am joined in the chat today by my good friend Kevin Horner. Please chat in your questions, comments, requests during the session today, and please give us both a follow on X. He is Kevin Horner CS. I am Rachel CS. And please like this video and subscribe to our Trader Talk Schwab coaching channel. Now get excited because we are going to be trading long options, getting directional with the anchored VWAP today. So definitely stay tuned for what we have in store. But before we get started, let's cover some of those important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information we're going to cover is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we are using the Paper Money software application today. Keep in mind that there are some differences between paper and live. Okay, getting into our agenda, we're going to start with our market overview like we always do. We're going to discuss the concept of long options, of price, time, and volatility, all those fun factors that impact the price of our option. And then we're going to place some example trades on the Paper Money platform. So, are you ready? Let's dive in. Well, we're going to start by looking at the S&P 500. We've obviously had quite a rally off the lows, even off of just leaving the 50-day moving average in the dust behind us, it looks like. And now, right now, let's just see how far we are off from all-time highs. How far is that? Let's see. We're going to measure that real quick. We're about we're about 0.5%, 50 basis points off of our all-time highs. Man, that was pretty quick. We are seeing a rotation into more of those cyclical type sectors like technology, especially off of the lows, just giving it a little bit momentum here. We definitely see the RSI down below confirming that as well. That's something that bulls want to see is the RSI up above 50 in a bullish regime and getting near or at some of those overbought levels to really show that confirmation in the trend as well. Now, another one I thought was a little bit notable here as well is our dollar index. So we know the dollar index, it's been trading in this range between 196. And when it was moving up towards resistance, it had a lot of pressure on risk assets. And now that we've had that resistance bounce, we had that 2-day break through that 50-day moving average. This is a huge catalyst for giving life into a lot of risk assets around the globe here. So notable things there. Now, today I did want to talk about the anchored VWAP because I know that that is an indicator that a lot of traders may use, especially when combined with long options too, when you're looking to be on one side of the market. So we're going to use an example and we're going to start with Palantir first. And I'm going to take all of these studies first off of Palantir so we could kind of see what's going on with the price of Palantir. And we'll kind of talk through that first. So with Palantir, we can see that Palantir has been really hitting these near some of these almost yearly lows, so we could say. So hitting this long-term level of support. And the other day, just on Friday, it printed this doji candle, that indecision, possible reversal candle, right at this level of critical long-term support here. That way you guys can see it a little bit better. We had a follow-through day yesterday where price closed above. We had a close above the high of the low day, so we had a hold. We're seeing even more follow-through today. So we're seeing even more follow through. So that gives us confirmation that this is a support bounce. Now, is this a complete change in the trend? Well, not quite yet because we are not seeing yet a higher high, but we are seeing a little bit of a bounce here. So For any traders that are looking to trade a possible support bounce and are looking to get a little bit directional on this swing, this is probably what they'll kind of tend to look for is a close above the high of the low day, that confirmation, that follow through. And then the next thing that they may be formulating is, okay, if I want to get directional, let's say I want to buy a long call here on this bounce to catch wind of this trend. Maybe where would I see that Palantir may run into a little bit of resistance? So that's where our anchored VWAP comes into play here and how we're going to use it in one way in this case to just kind of show you guys how to use it as a resistance level for directional swing trading. And we'll talk about a little bit more about what it is. So I'm going to place the anchored VWAP. You'll see it here as a study indicator. You can search for it in that box. Just anchored VWAP, all one word. And we'll talk a little bit more about what this indicator essentially is. And so it's basically, so it's the anchored volume weighted average price. And what this essentially does is it helps us to see where institutions are positioned because they're using this indicator and essentially what it's doing is it's telling us when price is above this anchored VWAP, it's telling us that, hey, that average participant or this institution, whatever it may be, is in that profit taking area. So their buyers are in control. That anchored VWAP is technically used as support. Now, kind of vice versa with that as well. So if price is trading under the anchored VWAP, you have that participant that is under a little bit of pressure, maybe underwater in their positions there. So you may kind of be wondering as well, okay, you've heard of VWAP, volume weighted average price. Well, what makes anchored VWAP a little bit different? So anchored VWAP essentially anchors to a specific point. So it's different than taking a standard volume weighted average price, which just kind of resets daily. So it just shows you a price based off of the volume. This anchors to a specific point. So a lot of times traders will anchor the VWAP to swing highs or swing lows to have that indicator based off of that certain anchor point. They may anchor it to an earnings date. They may anchor it to FOMC announcement, whatever it may be. And so that allows them to just really factor in both of those factors of price and volume, not have it reset daily so that a trader can kind of take a directional bias based off if we're trading above or below that anchored VWAP. So essentially what we're going to do in this case, we're just going to anchor this volume weighted average price to the highest price in Palantir. So again, typically traders will use those highs or those lows, and we're going to use our yearly highs here as an anchor. So all we're going to do is you're going to right click and you're going to set the date to. So that's what you'll see with that study. When you find a bar that you want to anchor it to, whether it's a high or low, whether it's an earnings date, another major event, maybe a gap, whatever it may be, you're going to right click on the candlestick and you're going to anchor it to that point. So we're going to click on that one here. And you could see how a price really used that anchored VWAP from the highs as a level of resistance all the way down into this downtrend. So you can see it rallied above it for a couple bars, fell another time below, rallied above it again, fell, kissed the anchored VWAP back in late March, and then came back down to meet these lows. So that anchored VWAP also aligns with this logical level of resistance right around this zone as well. So giving us that short-term high of 160 or so. So for a technical trader, they may say, okay, if I don't want to just only look at highs and lows to point out support or resistance on the chart, I may want to see what institutions are using to see if they're in control or they're underwater on their position. to be able to use that as a level of support or resistance with my directional strategy. So that's what we're going to focus on today, is getting a little bit of directional here with Palantir, buying a long call, because there's a couple things that we're seeing here. One, we've noted that we had that call hold right here. We also had this bullish um, momentum divergence. So you can see as these prices were making lower lows, we had the RSI making a higher low, giving us a little bit of an indication that there was a bottoming process taking place. Then we had that confirmation that occurred with price just having that hold and then having a follow through of movement there. So we're going to use that evidence to buy a call option. I know we have earnings right around the corner there, so we're going to keep that in mind as we manage this very short term position. And we're going to look about 2 months out from expiration, because we've talked about before how, hey, maybe a month out from expiration is a little too short for a swing trade, just because that time decay tends to kind of kick into high gear, really right around that 30-day mark. And the other thing that we also want to pay attention to is we have earnings in a couple weeks coming up as well. And so our earnings, when we do have an earnings event, typically leading into that time period, you do have this elevation in implied volatility. And so we want to make sure we're on the right side of that, and not holding that option through earnings where we may experience that decrease in implied volatility there. So, because that will impact our options just a little bit. So, um, let's see here. Okay, so we're going to look at the trade tab here. We're going to look at a couple things that we've already mentioned. So we're going to look about 2 months out from expiration. So we have the 18th of June here with 65 days left till expiration. Another thing we kind of want to keep in mind, we mentioned this with the implied volatility with earnings, but we also want to make sure we're at relatively low levels of implied volatility too. We can see that right down here at the current IV percentile here. So if we look at the current IV percentile, we can essentially see that it is at 36%, just meaning that it is almost in the lower third of where implied volatility has been the last year. So that is essentially giving us a green light as an option buyer, because it is a volatility regime that would favor option buying over option selling, since the premiums would be a little bit cheaper relative to where they have been in the past year, just volatility speaking. So let's open up this 18th of June here and scroll down closer to where the current price is. Now, what we're going to look to do, like we have in this class before, we're going to look a little bit in the money. We're looking for a little bit of intrinsic value. The reason why is because when we're looking further in the money, we are looking for an option that has a higher probability of expiring in the money, and as well as looking for a little bit of a larger delta to tell us, hey, if we do have that dollar move in the stock, theoretically, how much is our option going to move with it? So that's why we're looking slightly in the money today, and we're going to look at the 130 strike call. So about six or $7 worth of intrinsic value here. We do have a pretty tight spread as well, a ton of volume, a ton of open interest today. This is definitely one of the most liquid stocks out there, so we're not going to have a problem there with liquidity in this case. A couple other things we want to keep in mind. Notice that time decay that we talked about. It's about 10 cents every day in time that you're theoretically going to lose. We shed that as an option buyer. It works for sellers against us as buyers. And then if we look at that vega, that sensitivity to that 1% change in implied volatility, if we have that 1% change up or down, our option should theoretically move 22 cents there. So keep that in mind as well. So we're going to right click on this option. We are going to go buy custom with OCO bracket. Okay. And we're going to link these together and we are going to do about, let's do about 4 contracts here. Okay. So for our limit, and we're going to link these all to good till canceled as well. So for our limit on the entry, we are going to use a limit order to tell us that we want our price filled at this price or better, allows us to have more control over the price there. Now, we talked about our upside profit target. Now, where could we possibly run into a little bit of resistance here? Well, that's going to be right around 160. Now, you could have a closer level of resistance right here, right around 156 or so. But that's really going to be that next zone that we're looking at as far as a short-term level of resistance here. So on our trade tab, what we're going to do is we're going to put that as a conditional profit taking order. We're going to say whatever the price of the option is at this time, when the price is 160, we are going to look to get out of this option. So if I take this little gear here on the right hand side, I can go in here and change this to, I can unlink this limit and I could just say whatever the bid is at the time, I'm going to send a limit order. So you see how I did that? I unlinked this, linked that to the bid, and then I'm going to say when Palantir is greater than or equal to, and we're just going to use that 156 as that high. So it's really close to that 160 anchored VWAP, but 156 is that recent high. We're going to say if and when price gets there, we do want to take profit. And we're going to send a limit order at whatever the price the bid is at that time. Okay. So we're going to hit save here. So that is our offset order. Now, as far as our stop, we're going to put in about a 20% loss here. So if we take roughly $17 and we multiply that by 0.8, that gives us about 13.6. Okay. So this becomes a stop market. So this stop order is an activation order that will trigger off of the asking price of our option. So if the asking price of our option goes down by 20%, it is going to become a market order. Now, there is no guarantee that that order would get filled anywhere near our activation price because we know that there are things that happen in the extended hour session. Price could gap down at the open, things like that. So there are a ton of risks there. So keep that in mind when you are using stop orders. But this is still going to stay within our risk parameters of risking less than $10,000 in a trade and also staying within our trade risk of $1,000. Now, do keep in mind the entire risk on our trade is going to be what we are paying for this trade, which is the entire premium for 4 contracts. So it's roughly going to be about $6,800. We know that that's the most we can lose. Is our premium. We have our stop order that should come in place before that. And then we have our max profit to infinity, but we're obviously going to cap that out if Palantir does continue this momentum that it's had off the lows. So we're going to put this in our long options class and hit send. Okay, and let's see. I had a question in the chat. Can you put this in the analyzer before trading it? Certainly. Yeah, we can throw this in the analyzer here. Now, I already placed the trade, but we will just right click on this order, analyze trade here on this profile. Actually, I can just do this with my existing position. Hang on 1 second. Okay, we're going to clear out all these other trades. Okay. So with this one, essentially what you're going to want to do is always make sure that date in the upper right hand corner is the date after expiration. And then down below here, if you have a simulated trade, it'll light up. But if you have just a regular option position or stock position, it'll show with that black background here. And essentially what it's giving us is our risk graph on two different time frames. It's telling us what our risk looks like between now in the purple line and on expiration. Now, there's many different ways that you could use this tool. Essentially, we could say, hey, if it does go up to 160, so you can notice I'm putting my mouse over 160 or so, kind of where that anchored VWAP resistance was. If you look in the lower left-hand corner of this graph, you can see the colors of those two dates and the profit amount. And so obviously if Palantir made a major move today, that would land us in a world of profit over $7,000 because that would be big move with no time decay. So definitely a larger profit than what we would see on expiration. But again, we're kind of targeting a swing trade based off of this using long options. So this just kind of gives you a theoretical idea of where your profit could be. If the price of the stock moved there by expiration, and then if you hover over some of these levels, like to the downside, you could see, hey, if the price of the stock moved down to 123, for example, you could see where our losses could be. And by that time, we would likely be stopped out of that position. So hopefully that gives you a little idea of how to do that. And then I had another question on just how to review placing the conditional order to sell Palantir at 160. Yes, I will show that one more time for you guys as well. So let's just say we are selling this option, okay? So I'm just gonna go back and use this as an example. So if we're selling this option based on a condition, we're gonna click on this little gear to the right-hand side here, and we essentially used a limit order that was triggered. We just changed the trigger here when it showed our trigger price, and we just changed it to triggering off of the bid price, and we set that limit offset to 0. And then here we just took Palantir, clicked in that area below symbol, clicked in the area below method, and mark appears, mark midpoint, same thing, or last traded price, and we selected greater than or equal to, and we selected 156, and we typed that in there, okay? And then you guys can have, once you click out of that area, you can read that down here at the bottom as well, and you'll just hit save. Okay. And let's see, I had a question. Did we enter a credit spread? No, we did not, because we are in a long options class. So we bought a contract, 4 contracts for the 130 strike calls, and we put in an OCO order. Whoops, I am clicking all over the place today. We put in this one cancels another order. So this first order that we placed, that got filled, triggered a one cancels another. So we have our profit taking order up here, that is that trigger offset, and then we have our stop loss down below at a 20% stop market down below. So hopefully that helps a little bit. Okay, so let's take a look at another one. Let's take a look at Starbucks. Let's look at this one. Okay, Starbucks. If we take a look at the trend here, it's obviously been down in the intermediate term, but up in the short term here. So if we just kind of zoom into this recent price action, we could see that Starbucks kind of made a rally off of the lows, gapped above, I think that's its 50-day moving average. Let me put that there just to see. Yes, it is. So gapped above its 50-day moving average and has held its 50-day moving average now for nearly a week. So it's also forming a little bit of a bull flag pattern here as well. So I'm going to hide this one and actually just kind of draw this bull flag pattern that we have here that we just broke out of today. You can see that this is a bullish continuation where we had a very sharp move up into a little bit of a consolidation. And then we had the break above that level of resistance today. So now where does the anchored VWAP possibly come into play here? Well, let's take a look. If we're looking at different places where we could anchor this VWAP to say, hey, we want to look at an anchor from a relative high or relative low or an earnings event, whatever it may be. I feel like this all-time highs, or this yearly high would give us, would give a trader an indication to possibly start the anchor process there. So we're going to set that date there. You guys can see how I did that. I just right-clicked on it, set date, and look at that. So our anchored VWAP, I think it came right into play right at the same time of the 50-day. Yeah, you had that squeeze of them both right there. Such a confluence of old resistance, now new support. And you're seeing that price is holding that anchored VWAP and that 50-day for at least a couple days now. So that is giving us, would give traders a bullish confirmation there that they are in a bullish regime for this stock. And we do have a pattern breakout as well. And then if we just kind of look down below at momentum as well, we can see the RSI is also above 50 as well, telling us that we're back into that bullish momentum regime as well as a trend regime here in the short term. So let's use this one as an example to buy another call option. And we are going to look, let's look for another short-term trade because we know we have earnings in a couple weeks. So we're going to look for a short-term swing trade here just over the next couple weeks. And we're going to look about 2 months out on this one as well. So if we look at all products, and we check everything that we did before. So we're looking at the current implied volatility percentile. It's still relatively low in the lower half of where implied volatility has been over the last year. We're going to look about 2 months out from expiration. And then we can also see here, if we're kind of following the same guidelines before, looking a little bit in the money here, if we look at that 95 strike call, that gives us a tight spread, gives us a ton of open interest and volume that we're seeing today. And you notice that based on our delta, it's saying, hey, with a $1 move in the stock, our option should theoretically move 62 cents or so. We also have roughly a 62% probability of that option expiring in the money as well. So let's take a look at that one. So I'm going to right click on this one, buy custom. We're going to use an OCO bracket on this one as well. And we're going to do 5 contracts on this one. Okay. Now, one thing that we didn't look at, so we looked at support, where support could be. And support would be right around that $95 level or so. So support is right around there. Now, there is a way that we can say, hey, if in the next few days or so, if price goes down $3 below that amount, what should the theoretical price of our option be? So we can do that for our stop loss, because if we lose that 50-day again, or we lose that anchored VWAP, that may be telling us that, hey, this was a little bit of a fluke, a little bit of a false breakout, and we're kind of heading down in the same direction that we had been in. So we're going to use that as our downside. Now, as far as our upside, when we're looking for potential price target on where this price of the stock could go, well, let's just bring a little bit of the patterns into this. So let's use our measured move on our pattern that we see here with this bull flag. We know that when we're trading a bull flag, we take that entire length of the flagpole and we could essentially duplicate that and project it from our breakout point. Okay. So that puts us right above those yearly highs here. And we'll say we'll probably run into a little bit of resistance at those yearly highs, if I had to guess. Maybe even a little bit before then too. But if you look here, it only took about 5 days. We're breaking out on the 6th day for this pattern to form. So if the market loves symmetry, which we know it typically does, we know that patterns are not guarantees, but a trader can kind of possibly assume or use those rules to possibly place a profit target right around 104, 105 or so. So that's what we're going to do. We're going to use, I'm going to write that down for us. We're going to use below 95 to the downside, and we're going to use 105 to the upside here. And we're going to use the Theoprice tool to kind of calculate, hey, where could the price of our premium possibly be if the price of the stock went up or down below a certain level. So we're going to go back to the trade tab here, and we're going to change this column set. I just clicked on delta gamma here. We're going to actually change this to Theoprice mark. And essentially what this tool allows us to do is it says, hey, you can pick any date between now and expiration. You can make any stock price adjustment, any volatility adjustment, and it will spit out a theoretical price of what that option price could be based on this model. So if we know it took about a week for price to break out of that flag pattern, to form and break out of that flag pattern, it may take about a week for a measured move to possibly be met. So we're just going to look about a week out from today. We're going to use the 21st of April. So that still puts us at a week before earnings. So still quick in and out swing trade here. So the current price right now is 98. Now, if it goes below 95, we're just going to say 350. We're going to click out of here. So in the next week, if price goes below $95, so below our anchored VWAP support and apparently our 50-day moving average support, that would put our option at a theoretical price of roughly $5.01. Okay. So what we could do here is kind of use that as a little bit of a guideline here. And we're going to use this as a stop limit order to have more control of the price. So we're going to say when the asking price drops to 504, send a limit order right below it at 484. So we're going to put that about 20 cents below, since it looks like that's about how wide the spread is. So about 20 cents below. Now, there's a rule with stop limit orders, or risk with stop limit orders. Now, the benefit is you have more control of the price of where you exit your option. The downside is if you have that scenario like I mentioned before where the stock price gaps down overnight or something like that, you are not sending a market order to get out of that option on the open. You're kind of stuck in that trade possibly, or could be stuck in that trade if the price of the option is well below that limit price. It has to wait for it to get back up. So there's no guarantee of a fill whatsoever there. So keep that in mind with this type of order here. And then, so we did that downside. That allowed us to calculate our downside a little bit. Now let's look at our upside. So we talked about our upside being 105 or so. So let's just say roughly the price of the stock going up about $7. Okay, so we're going to click out of that, and that gives us a price of roughly 1206. So that gives us a price of where we could theoretically put our profit. So if we think that the price of the stock may make that move, may make that measured move within that time, we'd be looking at roughly 1206 theoretically. Okay, so we're just going to use that. This just shows you how to use the Theoprice tool with kind of doing the math with measuring some of these targets, taking the price of the stock and some of these other factors like the symmetry between price and time, and using that to translate it into your option order. So that's why we're going through this exercise on this one. So if we take this, make it a good till canceled order. Again, this is a first triggers one, cancels another. So we are getting directional. We are buying a call option, trading in the direction of the trend of that bullish continuation pattern there. We are taking profit at a resistance level. We are going to cut our losses at support of the anchored VWAP in the 50-day moving average. So we're going to hit confirm and send. Notice on the confirmation screen, same risk as before. So the most we can lose is what we're paying for our option, which is our entire premium. And that is roughly $3,700. And the most we can make is infinite. Of course, we are going to cap that off a little bit. So long options. There we go. Hit send. Okay. Let's see. Does Theo Price work for verticals also? Yes, it does. So if you change this to, like, if you want to change spread to vertical here, it'll show you what the net of that price is. So if I click on this one, like let's say I bought the 95 strike call, sold the 100 strike call. So doing a bull call spread here, it'll tell me based off of the stock price going up $7 within the next week or so, how much that spread should technically be. So, and I see a couple other things in the chat. Wacky Wack, you always crack me up with your comments in here. He said, I'm so old that I may be expiring in the money. Way to make me laugh today. And yes, Vic, the markets love symmetry and misery. Oh, I don't know if I've heard that one. I've heard that the market is always right. So, if you're wanting to argue with the market, you're probably not going to be that successful. So, a couple things that we've heard now. Now, I know we probably don't have time to go through this last trade example, but let's talk through it a little bit. So, here's another one that I had on my list to kind of talk through with you guys today. This is a stock that has been in this downtrend. We're going to hide this study as well. Been in a little bit of a downtrend, but it's also been coiling a little bit too. So you have lower highs being made where you just had that breakout recently of this little coil here. Let me actually draw this a little bit better. So you had a little bit of a falling wedge, I should say, where price is really accelerating from the highs and the lows at really different paces here, creating almost like a triangle type shape. And you had a breakout a few days ago on this one, clearly strong momentum with Cipher Digital as well, almost reaching those overbought levels. Now, if we look at the anchored VWAP, we're going to place that back on the chart. And we anchor this from the highs, like we've kind of done in some of the other examples here. We're going to anchor this from the highs. We can see here that price has used that anchored VWAP actually as quite a valid level of resistance. Now, I literally just had to remove my trend line because it was completely covered by the anchor VWAP. They basically made the same exact trend line and they were the same color. So if you guys can kind of see that, we had quite a power move yesterday through that anchored VWAP with that big bullish engulfing candle. So you can see it engulf that prior days. And then we had a gap up above this short-term level of resistance. So a bullish trader may say, hey, maybe now is a time to possibly take a bullish position in this name. Maybe we want to use the anchored VWAP as a level of support, maybe a little bit of a support retest, something like that, and place our stop right below that. So don't have time to go through that example, but that's just kind of another idea that we're kind of talking through here as well. So with that anchored VWAP, again, just a reminder that, hey, you want to anchor those to specific highs, swing highs or lows, maybe all-time highs, all-time lows, to look for levels of support and resistance, because this is what institutions will be using to manage their positions. They'll be using these to say, hey, whether we're in a profit or whether we're underwater on a position and things like that. So This again, the major difference between this and the regular standard VWAP is that the standard VWAP resets daily. This anchors to 1 point. So very useful for a lot of traders. Hopefully this helped as well. I'm going to see if there's any other questions in the chat. Let's see. Morning Rush had a question. For taking profit, would you recommend a trailing stop instead, or a conditional sell based on target premium like you set on a stop? Honestly, traders use both. It depends on your preference. So I know some traders may use a trailing stop because they do want to trail up their profits and protect any profits that they had, because there is obviously no guarantee that the price could go to the target to the target price of our measured move. So if you wanted to use a trail stop, and if that gives you a little bit more comfort, traders may find that one a little bit more enticing than the profit taking order. Another one as well, they may like that because it's obviously a lot more dynamic too, with the trailing stop. Some people like static stops, some people like dynamic stops. So honestly, if you haven't used either, if you're just kind of figuring out which one works best for you and your strategy, you can test it out on paper money. The only thing is, I believe trailing stops may, I think there's an issue with trailing stops in paper money. So keep that in mind when you're kind of testing that out. Let's see if there are any other questions. Riceberg, are your selections from a particular scan you have? No, I just look at a lot of charts and I try to bring the best ones. I guess sometimes I do start with a scan of a certain level of volume of listed stocks above a certain price, and with an IV percentile of less than 50. So just kind of basic things like that, but it still gives me quite a bit of a playground to work with here. So good question there. So, I don't see any other questions, but hopefully these couple examples gave you, just like I said, a nice way that traders could use anchored VWAPs here, and how you could just kind of modify those within Thinkorswim and trade those using directional long options. I want to thank you, Kevin, for being so active in the chat, answering all the questions and comments that come in there. Please give him a follow on X. He is Kevin Horner CS. I am Rachel CS. Please like this video and please subscribe to Trader Talk Schwab Coaching on YouTube. Thank you, everyone. See you later.